I have some tax secrets I want to share with you today, but you have to promise not to tell anyone. Yeah? Okay, come here. Okay, I was just playing earlier because these tax secrets I'm gonna share with you today are actually very, very important that you and other people all around the United States know about the tax system. Let's go ahead and get into it with tax secret number one. Taxes hurt the middle class and working class people the most. Now, I know, okay, before we get all riled up, okay, the rich and the wealthy actually pay the most money in taxes, like the actual physical amount. And outside of a few billionaires like Jeff Bezos and Elon Musk, or the top 0.0001% of people, the rich actually also have the highest effective tax rate as well. Just take a look at this screenshot from the Tax Foundation. Okay, as you can see, the average tax rate of people in the top 1% is 26.8%, which is higher than the average tax rate of all taxpayers at 14.6%. So then let's get back to the question of why do taxes hurt the middle class and the working class families the most? Well, it all comes down to building wealth. And I'm gonna break this down as easily and as clear as I possibly can with some graphics. So a lot of energy went into this. So if you could do us a huge favor by just hitting the like button for the YouTube algorithm so other people like you can learn about these tax secrets. Did you do it? Okay, thank you. Now first, understand that wealth and income work very differently for the top 10% of high income earners than it does for the average American household. So this circle represents about $1,000 of income. And out of that $1,000, the average American household may pay something like 14.6% in taxes. So we take out some income from that circle to dedicate to taxes. And then after that, for many households, the rest of their income goes into paying for their living expenses. Okay, so they pay for their mortgage, they pay their bills, they buy groceries, they have to have some form of entertainment, etc. So that makes their circle that was filled with income almost empty. But smart households tend to be able to save a little bit and invest, whether it's in a 401k plan or owning a home. And that investment creates another small circle representing their wealth growth. So now we have three circles. You have an empty circle that used to be filled with income, but is now empty because the household had to pay taxes, the household had to pay for their living expenses, and if the household was smart and able to, then they were able to put some money into building wealth. Okay, now we're getting close to the tax secret. If you look at the wealth circle and you look at the tax circle, you see for the average American household, they are almost identical in size, meaning that the proportion of people paying taxes and building wealth almost cancel each other out. So that's the average American household. Now let's go ahead and look at what happens for the top, let's say 1 to 10% of high income earners and how wealth building works. So this circle represents $1,000 of someone's income in the top 1% of income earners. And because they make more money, their effective tax rate is also higher. So we also will take out a little bit more of their income to pay for taxes. And then the rest of their income can still go towards living expenses. So we'll empty out that circle. Okay, but here's the thing. For the top 1%, net income doesn't really matter because they own assets that significantly grow in value. So they have this huge circle of wealth growth. And this is like the ultimate safety net, right? Because if their income could no longer support their living expenses, then they could simply sell a portion of their wealth and their assets, which is something that many American households simply cannot do. Okay, here's a screenshot of how Jeff Bezos, the founder of Amazon, wealth grew compared to the typical American household. So for every $100 of wealth growth, Over that period, the typical American family paid $160 in taxes. Meanwhile, Bezos paid only $1.09. And this is because Jeff Bezos owned a huge asset, which was Amazon, and Amazon quickly appreciated in value, and he was able to pay himself a very small salary. You also hear about other high income earners doing the same thing. Like, they pay themselves a very small salary. You hear stories like Mark Zuckerberg only paying himself $1 a year. So that screenshot pretty much sums out how taxes significantly hurt middle-class working families in the wealth race. Okay, let's move on to tax secret number 2. But really quick before I do, if you are new to our channel, hey there, I'm Sean with Life Accounting, the accounting company that helps you save on taxes and build more wealth. And if that sounds good to you, make sure you subscribe to our channel so that you can grow with us. All right, tax secret number 2. Businesses get the best tax write-offs. Okay, when you run a business, you can write off almost anything. Using your car for business, write it off. Using a portion of your home for business, write it off. Traveling to the Caribbean on business, write it off. Hey Sean, look, I can write off a sheet of paper. Okay, kind of like that. But those are just some examples of some write-offs, and that's just scratching the surface. I mean, there are hundreds, if not thousands of ways to write off business expenses. And I think it's rightfully so. I mean, I have a couple businesses and I know how hard it is to invest and grow a business. And having great tax write-offs and tax credits can definitely help a business grow in the long term. Because with this, you can actually start building faster wealth. Right? You can start building a valuable asset in a business that appreciates in value. And while that thing appreciates, you can pay fewer taxes just like the rich do. So yes, start a side hustle, start up a business if you feel like you have the skill set for it, because the risk is well worth the reward. But here's the thing, okay? Majority of small business owners work in their business. And as a result, they get hit with tax secret number 3, which is self-employment taxes. So if you actively work in your business and you're taking payments, you're taking a salary, you're taking any type of money home, then you can get hit with what is called self-employment taxes. Now, this can be a dangerous tax, especially if you do not understand the tax system, because now instead of your business helping you grow and helping you to save on taxes, it actually can compromise your trajectory of building wealth. Because if you're not taking advantage of tax deductions, tax credits, or selecting the right entities, then now you are being hit with 3 different taxes, right? You have federal taxes, you have state taxes, and now as a new business owner, you have a self-employment tax. That's why it is so important to make sure you select the right entity and that it is taxed the correct way, which I'll link a video down below breaking down the differences between a S Corp and an LLC. So make sure you check that out after you watch this video. But at the highest level, your goal as a business owner should be to turn your business, your active income, into a passive income business investment. This means that basically your business can run without you. It can produce positive cash flow without you, and it can provide passive income to you, which allows you to completely avoid the self-employment taxes and likely put you on a faster trajectory toward building wealth. All right, and this is exactly what the rich do. All right, moving on to tax secret number 4, investors hack the game with depreciation. Okay, what does this mean? Basically, as an investor, you can take advantage of one of the best tax deductions, at least in my opinion, which is depreciation. Okay, depreciation basically allows you to take a loss on the value of a declining asset, even if that asset produces positive cash flow. So basically you're making money, but you're saving on taxes. For example, I did a video on how NBA and NFL owners basically get a huge tax deduction because they're able to take depreciation on their franchise teams. Like, that's crazy to me. These NBA and NFL teams make millions and millions of dollars every year, and yet the owners of the team are able to take a loss through depreciation by owning that team. And of course, you can also take advantage of depreciation in real estate by owning rental property, or you can take advantage of depreciation if you have a business and you're buying equipment or you're buying a car or something like that. Okay, the point is depreciation is like a hack to people who own real asset investments. So what does all this mean? Okay, well, at the end of the day, you have to master wealth growth. And that may involve mastering your income, mastering your taxes, investing, and much more, which is what we talk about on this channel all the time. Now, we have 2 more videos coming up next that will teach you more about how to save on taxes and build wealth. And we'll see you over there.